Thank you for joining iMeet. When you hear the tone, you will be the 23rd person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. Today we're going to quickly review the last couple days in the market, try to figure out what's going to happen the rest of the week. We're going to look at a couple of the different indexes, see what kind of shape they are in. And if this is your first time here, I generally talk about 20 or 25 minutes, usually goes over a little bit than that. And then we open it up to questions so you can ask about individual stocks or the market in general or industries or targets for stuff, whatever you feel like talking about. And we try to wrap it up within about 40 minutes. So let's go ahead and jump in here real quick and get started. The markets were up for a second week last week. We ended up kind of overbought midweek with the S&P short-term oscillator hitting 4.7, which was one of the highest points that it had done all year long, actually. So I was kind of surprised that we actually didn't have a little bit more of a pullback. But anyway, the CTI is still a bullish plus 13. We'll stay positive probably on that for another 5 or 6 weeks before we go negative. The momentum index actually slipped a little bit last week to a neutral plus 3. Sentiment index also went down to a negative minus 1 as a few indicators got a little excess of the fear and greed index that we follow. And I think the put-call index also went into bearish ground. So they got a little bit, people getting a little bit hyped up on the market here. Basically, the reason we had to pull back towards the end of the week, besides being overbought, was they get a little bit fired up with the North Korea rhetoric that goes on with the war words and stuff. That's always going to cause a little bit of dips. I'm surprised actually that it doesn't cause a little bit more than what we have. But anyway, we saw the financials, the industrials, and the energy sectors, along with small caps and transportations, outperform last week. Well, we're starting to see a little bit of profit taking in some of the defensive sectors like utilities and consumer staples. So we're going to look at a couple of the indexes right here, try to get a gauge on the strength of the underlying indicators. And then what we're going to try to do is go ahead and look at some of the sector rotation that I see in here. I think there's a chance for us to go into some beaten up sectors that are just starting to break out, and we can get a trade here probably on most of these through the end of the year. And we'll get in that shortly. Here's the Dow Jones Industrial Average. Nice rising trend line over here. So it's kind of following up with the 50-day moving average. We had a nice little breakout over here off of this descending trend line over here, consolidating some of the gains off of this jump. This week here, which was 2 weeks ago, was actually the strongest week that Dow has had all year long. I think we were up about 2.2% just on that week. So we broke out to a new high last week. Momentum looks strong. We should see the 14-day RSI probably get back above 40 over here, and you're seeing some nice accumulation. The 30-day stochastic, which I like, is also above 80, which I like to see if we're going to be trending up. Okay, here's the NYSE Advanced Decline line. This is the leading indicator of market direction, and this isn't telling me the market's headed south at any time soon. So this is showing you that there's broad participation as the market's working its way higher. We had that big move 2 weeks ago. It's got to consolidate, so the move may be a little bit slower in here. But this is exactly what you want to see if you're long the market. Okay, here's the NYSE new highs and new lows, 52-week highs and lows. And you're seeing some expansion over here, not as much as I'd like to see. I think that's because of the consolidation from the previous week. But the new lows are just keep falling. They're down to about 12 or 14 a day now. And that's something that, that's good. We have about 23% of the stocks in the S&P 500 that we follow now are within 1% of a new high. That also shows good participation. And you're back down to about 9% of the stocks within 1% of a new low. Here's the S&P 500. As you can see, we're still working our way up this rising channel. This is why our target is 2355. I think we're trading right about halfway of this thing. I think a move to new highs should get us to 2530, 2533 maybe. Good accumulation. The momentum still staying strong. This is the short-term MACD, give them a little bit of a, pullback in here, which is the consolidation, which is fine. Today we are up 2 points or so. We're almost back, within about 3 points or so of breaking out to new highs. What's really nice though is the Russell transports are making another new high, and we also got a new high today from the Dow Jones Transportation Index, which is giving us another, reconfirming the Dow buy signal that we had, which is basically calling for more upside. If you read the On the Edge, our monthly newsletter, we thought we'd be surprised with the upside in the market, and we have gotten that so far. Most analysts were looking for a pullback in here. Anyway, so here's the Nasdaq. The Nasdaq came down to its rising trend line here. We're kind of bouncing off of that. This is mainly due to the weakness in the semiconductors and the big cap tech stocks. We had a nice rebound this morning in semiconductors, but we've given it back already today, so we're about flat on the semis right now. But we had some profit taking the big cap names over here. The Nasdaq 100 is actually looks worse than this. I think it's probably gone. I think it fell below the 50-day moving average yesterday, I believe. But would I sell here? Probably not. I think that as we consolidate a little bit of these gains and the Nasdaq 100 finds a little bit of a bottom, I think we'll move our way higher and break out to new highs on the Nasdaq soon. So a break above this resistance line right here where we hit our old high, and I think we can get probably up here to I think our target is 65.20, which would be right around in here somewhere. So I think there's still some more upside to that going into the rest of the month. And don't forget, not next. I guess towards the end of next week we start third quarter earnings. They're projected right now to be strong again. You may have a little bit of a trim due to the hurricanes, but I don't think it's going to be something that's going to knock us off, pull our stock out and head this thing low. I think it's it may clip a little bit or keep the gains a little bit light, but I still think we'll have a good third quarter here going out into October, and then towards the end of October is when I think we'll see some a little bit more volatility coming in here. Okay, here's the Nasdaq advanced decline line. Look at this. This is probably the strongest it's been all year, and this is because this is good participation that you've had. And if you're a regular here, we talk a lot about divergence with the Nasdaq starting to pull back a little bit and moving sideways through here. Yet we have the Nasdaq advanced decline line breaking out here to the highest it's been in probably almost all year. This is called positive divergence. This is what you want to see with the underlying indicators. And this is what's telling me that we're probably going to break out to new highs here very shortly on the Nasdaq. Okay, here's the 52-week new highs and lows on the Nasdaq. Again, you were getting some great expansion over here. A little bit of a pullback here the last week with this semiconductors coming off a little bit, but nothing to be worried about quite yet. So I think I'd like to see some more expansion on that. Well, maybe we'll see some more. We're about 117 today. Let's try to get this back up around 150 to show a little bit more strength. Okay, here's the Russell 2000 making a new high the last couple of days. We're making a new high today. In fact, it's outperforming a little bit. We're up about 0.34% today. Good participation on this. You're just starting to get a little bit overbought. This is about an 8% move that you've had in here, so it's we could get a little bit of consolidation as we move sideways to higher in here. But I still like the Russell. You want to see the small caps lead. That's a sign of a healthy rally. And the underlying indicators over here on the MACD and the RSI and the stochastics are strong. So even though we're a little bit overbought on the S&P oscillator, which is when it gets above 4, and if you go to the beta site, you can get that for free daily. You can see that we're due for a little bit of consolidation here when you have a move like that, but then the trend is going to be up. Okay, here's the transports. When I wrote this morning, they were getting close to a new high. This is about an 8% move in this thing, but we are at a new high on the transports right now. We busted out. We're at 97.63. The old high was 97.42. So you're going to start hearing the talking heads talk about a Dow theory buy signal, and this is confirming that the Dow and the S&P 500 should break out to higher prices in here. Okay, last index before we get on to some of these different sectors is the semiconductors. You can see this little pullback in here. We started out the day up a little bit. We've given this back, but I think that I think we're fine. Here's the 50-day moving average. You're having a little bit of a pullback in here. Momentum is still staying above 40, which is what you want to see. In fact, it's still above 50. The stochastic 30-day moved below 80. I'd like to see that turn around. I think you'll probably see this in the next couple of days. And don't forget, we have I think tonight we have Micron releases their earnings tonight. Traders will focus on their forecast going forward here. That could move the technology sector a little bit tomorrow, depending on what they had to say. So keep an eye on that. I think that's going to come out after the close. All right. So last week, top sectors were energy. Actually, industrials was second, and financials. And I put what they were up the previous week. So we've got about a 5% move here on the energy sector in the last 2 weeks. Financials are up about 2.6. We have the industrials up about 2.8, almost 3% now, because they're up a little bit higher today. What is causing that is they've had a great year, but what we have on these, especially at the industrials, is a lot of that is due to the weaker dollar. As the dollar weakens, a lot of these industrials that are multinationals do not have the currency risk when they bring their profits back to the States. So that's allowing the industrials to move. Now, what was weak last week, besides the technology, was consumer staples and utilities and healthcare. Now, the healthcare, we can forget about that. That's just because they were bringing up to talk about are we going to bring out another health plan. And that's not going to happen, I don't think. So that's why you had the pause in the healthcare. I would still go ahead and, like we always talk about, keep try to find a couple biotechs in industry groups that are trading higher, or that are just upgraded. If you go into trading ideas on the Market Edge site, a lot of times I will look at some of the strong sectors in the stocks that they've already had a nice move, but maybe they were consolidating sideways, so they got downgraded to a neutral. Now they're upgraded to a buy again. That's a good place to find stocks also that are in a strong industry, strong sector, and they're still strong. They just maybe had a little bit of a pause, and now they're starting to move up again, and they get upgraded to a buy again. So that's something you can look at. Okay, first of all, I want to look at here. This is a chart going back 10 years. If you've been with us for the last couple of years. This is the XLE. Basically, I could do the same thing with oil almost, but we saw this thing test this upward trend line going back about 4 or 5 years. Now, as we used to talk back in here, we had the break of that trend line. This is actually almost textbook. It came back up here to the trend line, bounced and played around with that for a little bit, couldn't get there, and then we worked our way lower. To where it bottomed, I think, in January or February of 2016. So when you saw this happen, when you break something that's a 5 or 6 year trend line, that means something that's fundamentally has changed. We didn't know what it was at the time, and we still may not know what it is. But you have to start thinking where you have these different governments say that they're going to only produce, or car dealers only produce electric cars in about the next 3 or 4 years. Stuff like that is what's causing this to go down. So we had this other trend line coming down. We broke above it, got a trade up here where oil, I think, went up to beginning of the year. It got up to around 55, 56. It was getting close to 60. Bounced off of that. We pulled back. Now we have another breakout where we were in that downward channel, and we're just getting a breakout above this again. Now, this is kind of a busy chart. But I have 2 different Fibonacci retracement levels on here. Now, one of them shows that we're almost up to the 50% retracement on this move from April of 2014 or July of 2014 down to August 2016. Now, generally, if we can get through that 50% retracement level, which right now we're in the 60s, that would probably be somewhere right around 72 or so. I think you're going to have a little bit of resistance at that level. If you can get above that, you might get a trade up to 75. But I'm actually only looking for this XLE over the next couple of months to get up to about 72 to 75. That would put oil up probably around 50, 54, 55. I think at that point you probably just hold on to until you start to see oil get, the volatility pick up. Then you can take some profits. We're going to look at some oil stocks here shortly. But this is, like I said, this is going back several years, and you can see the different breakouts. And you can see where this breakout occurred. We just broke through the 50% retracement of this whole 5 or 6 year move. And now I think, we probably have some more upside, which would take us. It's funny how these Fibonacci lines will hit lines going back even several years. So I think that is where we'll top out, which would give us almost another 10% to the upside. Okay, now here, this is something that we're going to add to our new charting package in Market Edge. This is called a ratio chart, and the best way to look at these is with lines and not daily. And what this is going to do, this compares how the XLE, I should have done it with oil, but I did it with XLE instead, how this compares to the S&P 500 large cap index. And when you can draw a trend line into this, and you'll get more of this when we add it to our new beta charts. When this breaks out above a trend line, what this is telling you is that this is now outperforming the S&P 500. So you can find your different sectors and different industries with this new charting thing on the ratio charts, and you can find exactly when this thing begins to outperform the broader market, which is what it's doing right here. I think XLE is the relative strength on that currently is, give me 1 second here. Sorry about this. Okay, it's outperforming the S&P right now by about 3 or 4%. So that's what you want to be buying. And when you see a breakout like this, you can see, okay, from here on out, this thing's been outperforming the S&P 500. It allows you to go in here and buy this. Also, with the accumulation distribution, we've talked about this a lot. This isn't you and I buying oil stocks, energy stocks. This is institutions coming in here after months and months and months of sideways to taking profits in it. They're going on board with that now also. Okay, next one here. Now we have the industrials. As you can see over here, we had this lower channel, and now we have another breakout to the upside, making new highs. That also, you can see the accumulation in the industrials. Part of that, again, is due to our weaker dollar. When you do a comparison chart on the new beta charts, if you put up XLI or some of these big cap multinational companies, and then do a comparison with the UUP, you can see how the dollar, when it's going down, these things start to go up. When the dollar starts to catch a bid, you'll see these things start to roll over a little bit. And again, that's because of the currency risk and all that it gets taken away when the dollar is weak. So the industries, I think, is strongly. The defensive stocks are in here. The Boeings and all that. General Electric would be in here. I don't like General Electric, but you can look at some of the big cap industry names. I think there's still some upside to those. Okay, now here's the XLF, the financial sector. Again, you can see we were in a downward channel. We talked all through here about you buy the dips. Okay, that went right down to the 200-day moving average, bounce off of that, and we've gotten a really strong rally off of this. Now, part of this coincides with the FOMC meeting here about a week and a half ago, where they still think they're going to try to raise rates one more time in December. That's probably right now. The last time I looked, it was about a 50-50 chance. We can look at the CBE group to see how that goes as we move forward here in the next couple of weeks. However, I think the financials still have a chance here. That I would actually buy them in here now, and on any pullback, especially towards the 50-day moving average, I think you could add to that. I think we're going to look at a couple of different bank stocks that I think you can own in here. Again, if you look at this, accumulation. This is where they decide, okay, we're in now. The banks are time to buy. This is institutions to do this, not you and I. All right, this is XLK. Now, one of the things when you talk about sector rotation, you can do a couple different things. One of the things, you just sell whatever you have in that sector, or you can move it into another sector. But you have to look at the bigger picture. And in this case, I think technology, the broader trend is still up. We're having a little bit pulled back down to the 50, but I would want to see technology probably come down here break below the 100 moving average before I would think about selling that. If that happens, the whole market's going to be taking its lumps. So all I see in this thing so far is I think this thing could come down if we did get some kind of problems that we don't see right now, whether it be North Korea or whatever. If you came down here to the 100-day moving average, that's still going to keep you in this upward channel. And at that point, right now, I think if we bounce off of this, we can still work our way up to new highs. So I'm not suggesting by any means to sell technology. I would look to maybe add to some positions on weakness, especially if we get any further down here towards the 100-day moving average. But some of these other sectors we're going to look at, I think I'm starting to think a little bit different. I think you may want to begin to lighten up on some of these positions. Okay, this number one, some of the defensive sectors are like utilities. Okay, if rates are going to go up, utilities are going to go down. Okay, right over here is right around where the FOMC meeting comes in. They're talking about, we're going to still try to get rates a little bit higher. You'll start to see the dollar maybe move up sideways a little bit higher. In this case, we're getting close to the 100-day moving average. This move from here to here, if you look at the Fibonacci, we've already tested the 50. We already retraced 50% of that move, bounced off of that. If we break that 50% retracement, and you can draw this in yourself, that means that we're probably going to go back to this area. And if you break that 61.8% retracement level, normally you're going to retrace the whole thing, and that would take us back to here. The only reason I would see this going back would be that we're a little bit oversold in here. We got a nice bounce. If we break this thing here, that means that the odds of a December rate hike are starting to improve, and some of the economic data that we see is also beginning to strengthen too. So utilities, I'm not a buyer of those anymore. I think that at this stage you can hold on to them if you want the yield. Otherwise, I think you sell small positions on bounces and see what happens. Consumer staples are the same way. They're very sensitive to what interest rates are going to do. The 10 years gone from 2.06, I think, up to 2.25 here, just in this little time frame here. So they did respond to that. You were oversold over here, so you got a little bit of a bounce. I would lighten up on the consumer staples if we can get back up here around the 50 to 100-day moving average. I know Procter & Gamble's had some iffy things, Colgate, Palmolive, some of the ones that we liked earlier. I just don't see I don't see what's going to project them to move higher if their rates are going up. Okay, let me get over here now. Okay, here's healthcare. I did want to take a look at this. You talk a little bit about this. All I see of this being the trend remains up, the longer-term trend. All I see of this is traders or fast money kind of coming out of here that because of the talk about that the Republicans want to try to push through one more bill. That wouldn't be too good for some of the hospital stocks. In fact, some of those actually had a pretty nice pop here the last couple of days as it starts to look like this isn't going to go through. So I would look to buy the healthcare stocks on this weakness. We'll find out, I think, by the end of the week if this new healthcare thing is going to pass. It doesn't look like it is, and that would allow this thing to start moving higher, especially with the biotechs. I think biotechs are off today, but they were one of the stronger groups yesterday. Okay, now we're going to look at a couple of oil stocks. We're going to look at a couple of things that I think you can buy in here. Yesterday we had an upgrade from UBS, I think it was, talking about some of these. Let me go in here. Okay, they upgraded the drillers yesterday, and we're going to look at a couple of those. The first one here is Diamond Offshore Drilling. Now you can see this had this double bottom, almost a triple bottom down here. We broke above the 100-day. Now we just today we're up here battling the 200-day moving average. But these things are down from $21, $22 to $14 over the last year. I think that even though you've had a pretty nice little run in here, you're just starting to see the accumulation going in here. On the smart chart, you want to look at the 50-day up-down slope. Keep that to make sure that thing's still going up on these. But underlying indicators on some of these look good. I think you can buy some of these on a pullback. DO is one of the ones that I like, Diamond Offshore. I think I might want to wait for a little bit of a pullback. Sometimes you get that in the morning. Okay, here's another one. This is ENSCO ESV. Has the same kind of chart. It's a low price chart. the upside on this thing, we're trading around 570, something like that, 550. I think we can get a trade up here to this 50% retracement, so somewhere around 7 to 750. I think you can just get a trade on ESV. Now these I'm also looking at probably going out, into November, maybe even a little bit longer. I think this rally in oil is going to stay up this time for a little bit longer than before. We tried to play we played the bounces in these channels, and we did pretty well on that. But this time I think it's broken the channel to the upside, and this usually when you get a trend like that that's lasted more than a year, you can get several weeks where this thing can work its way higher. Keep an eye on the accumulation distribution. If you start to see this move up, then you know you got a winning trade on that. You're in early. You're still in early. Okay, here's Noble Drilling NE. You have this breakout here from what is this? This is $3 up to $3.50 up to about $4.50. You could probably get a trade in this thing up here to anywhere from about $5 to about $5.25, that area. So it doesn't sound like much, but it's maybe 15-20% on your trade. Another one that I looked at. This is Rowan Company, RDC. Exact same chart. All these things came over here. They're broken out. They've only broken out for about a week and a half, and I think this thing has several more weeks to go. I don't like the accumulation distribution yet, but as these things start to move sideways to up, you're going to start to see the accumulation start to pick up, and that's when you know, again, that the trade's going to work out for you. Okay, some of the other ones I think, more the service companies. Halliburton. This would be a good time to get involved with that. You had a heck of a pullback. We're up here around 44 right now. Halliburton can get a trade probably up in here to around $48, which would be the 200-day moving average. Now this one here, you see the spike starting to happen on the AD line. That's good. You've broken a trend line going back all the way to February. Halliburton, HAL can be bought in here for the next month or two. Another one just like it, Schlumberger, SLB. Again, here you just have your spike starting on your AD line. You're getting up to a little bit overbought on some of these, but not too bad considering where you think they can go. Schlumberger, I think you can get back up here in the 70s. You have a gap that happened up here around 75, gap down. If you get above that 74 area, you can see if you can try to fill that gap. But Schlumberger is another one I think we can take a look at. Okay, here's another one, another services. This is Murphy Oil, MUR. You'll have a nice big consolidation over here. Now we're getting that little bit of a breakout coming down from here. Almost overbought. You got this coming in here. You got your turn in your AD line. I think MUR can give you a nice little trade up here. Probably we're up here around 26 and change. You can probably get your thing up here to this 50% range, which is getting you up to the high 20s. Here's now we're going to look at a couple of the different. A couple other ones real quick. Chevron, CVX. I think it's moved too high, too far, too fast. I don't think I would chase any of these stocks in here because the oil has given us a lot of head fakes for the last year or two. And I think eventually, probably towards the end of the year, it'll die out again. But Chevron has had too much of a run already. ExxonMobil, if you're looking for one of the big names with a big dividend, ExxonMobil, XOM, has not had the move that CVX does. A couple other ones real quick that I like. APA, Apache. I think you can buy that. And Darko, APC, Andrew, Paul, Charlie. Another one I really like is Suncor Energy, SU. That was added to one of our portfolios here this last week. Murphy Oil, I told you about that. That's what we just looked at. I like that chart a lot. Overbought, but it's worth a look. Would be Phillips 66, PSX. I would look to buy that on any kind of weakness or pullback. The last one would be Occidental Petroleum, OXY. I think you can do something good on that. Okay, a couple of the banks now. We saw the financial starting to break out. We've been talking about buying the pullbacks. Now we're starting to see a breakout on those. Here's Citigroup. You can see this channel on Citigroup kind of rolled over here a little bit more. I think we can get a trade up into the mid to high 70s on Citigroup. It looks nice. You're starting to get that turn in the AD line. Another one here. Look at this sideways trade in Bank of America. If you want to buy, I would buy this thing here on a pullback, especially on the 24 to the 50-day. If this thing breaks 25.50, you want to be in it. Here's your turnaround in the AD line. A little bit overbought on the stochastic, but I like to see this over 80 when I'm buying anyway. and you're not overbought on a 14-day stochastic. So Bank of America, I think you can buy, and if you're waiting for a pullback here and all of a sudden it jumps up above 25.50, then you know you want to be in it on that one. Okay, a couple of other banks that I like. Some of the brokers look good. Morgan Stanley, MS. I like AXP, American Express. Some of the smaller regional, or not smaller regional, they're the big regionals. State Street, STT. And go ahead and get your questions ready right now, because I only have a couple more of these to look at, and then we'll try to look at some of your stocks. FITB, First Third. I really like this one. PNC Financial, Paul, Nancy, Charlie. Another one that's just breaking out that I think you can own if you don't want to buy the city groups that have already moved. USB. The symbol on that is USB. Another one breaking out here, SFL. It's called Ship Financial. Now, on these things, we talk about this a lot also, is where you, if you go to the point and figure breakouts and the point and figure early alerts. Okay, we know that the energy stocks, the oil stocks, the bank stocks are breaking out here. Go to those modules on Market Edge and find out. It'll tell you. You'll get a list right there. This stock that broke out yesterday. Okay, here's the point and figure early alerts. If this stock trades at this price, you're going to get a triple top breakout. That's the ones you want to own. Or even go to the daily upgrade. And some of those stocks may have already moved, but when they get downgraded to a neutral and they're going sideways, now that you know these sectors are breaking out now that sector, that stock may have been consolidated, and now it breaks out to a buy again. Time to buy it. So you go to the trading ideas, go to daily upgrades, and look for the ones that have. If you're going to buy off the upgrade list, look for the ones that have a 1.03 50-day relative strength or higher. That way you're buying the ones that are outperforming on the market. Okay, let's go ahead and get the questions in. I have one coming in right now. Let's go with this. Any thoughts on the mining stocks? Nancy, I think that I wouldn't go with just the gold miners. I think because some of the material stocks that we're going to use, I think you can go. I do like some of the mining stocks, the diversified one. I still like Freeport in here. FCX, I think. Not Noble. I try to think which couple, but look for the diversified ones. I think the mining stocks could still go. I would not just be buying the gold mining stocks. The reason being, if this mess with North Korea starts to abate a little bit, then I think that you'll start seeing gold go down a little bit more. And also, if the rate starts to rise and we get past this a little bit, that's not really good for gold. So I think keep your eye on gold also. If it breaks below $12.95, you may be in a little bit of trouble with that. Okay, what about SunTrust Bank or Cullen/Frost Bank? I want to check on my other package over here real quick. STI. That doesn't work. Okay. Let's see. I know I'd have to share my screen when we're getting too many different questions in here. I'll take a look at those in just 1 second. Linda, are we in the late economic cycle? To tell you the truth, I don't think so. I think we're starting to kick it in again. I think you're going to see you're kind of in the early to mid part. I think you've got some good cycle growth in here. Like I say, our CTI went bullish again we went on November last year around the election time, and with what if we can get the build out and the infrastructure and stuff, I think we have probably another probably year and a half to 2 years on this cycle before they start talking about a recession coming in. I see more upside in that. Okay, Cullen/Frost Bank. If you could give me the symbol for Cullen/Frost, I'd appreciate it. I'm going to go ahead and share the screen here on some of these for some of the other stocks that are coming in. Okay, let's look at STI. Oh, here's one I had up here. This is BMA, Banco Marco. Don't ignore some of these foreign banks right in here because like I say, we're having globally we're having everybody's economic growth is really starting to kick in at the same time. This is BMA. This was added to our value portfolio this week over here. So we had a nice pop in that. This is one you can take a look at, a nice little dividend. But this is, I think, in Argentina. But some of these foreign banks are just getting into some pretty good growth in here. Okay, here's STI, SunTrust. This looks great to me. I bet the accumulation's already turned down here. See this? That's the main thing you want to see in this. STI looks really good. You're breaking out of this resistance up here at this 57 area. You're going to go back and challenge your new old highs on STI. Let's see. Did you give me a symbol in that Colin Frost? CFR. Okay. Yeah, STI looks really good. Okay, you've had a heck of a bounce off of here. I don't know why it was so oversold. You can do a little bit. I don't like this as much. I would buy STI before I bought this. This is a little bit overbought. You're going to need some sideways action here, and I'm not sure. You're back kind of in this trading range, so I would go with the STI. I like that a lot. That's a good looking chart. Anybody else have anything? I don't see anybody typing. Okay, listen, I hope you got something out of that. I think this is a pretty good change in the market where we can move away from some of the old FANG stocks and kind of buy those semiconductors, what we've been doing all year long, and kind of switch some assets over into some sectors that still have they've turned already, but you still have some upside to go on these things. This rotation isn't a 1 week, 2 week type of a deal. It can last for several weeks. And I think in this case, especially with the energy in the banks, that we can probably get a good rally in these things through the end of the year. That should keep the market in pretty good shape going forward. So I appreciate you taking time out of your busy day to join me in this. I hope you got something out of it, and I look forward to seeing you all next week. Have a good week.